for my strategy is only trade 2 hours of the day. The first 2 hours of market open, that's why you see this green box in the outline.
Yep.
That's just lets me know, okay, Dom, it's time for you to trade. You can actually work. All I look for is EMAs, moving averages. If we just focus on the screen with the white background,
Mhm.
this is my main. This is what I'm looking at majority of the time. All I'm doing is saying, hey, if the yellow line is on the bottom, we know we're in a bullish bias. If the line is on the top, we are in shorts.
Okay.
That simple. So if at any if the yellow line is on top, there should be no reason for you to be buying. Like there's no reason at all. You already know that the bias is short. You go with the trend. Like I scalp, but we just go with the trend until it actually breaks, and a break is just crossing back. So this little area where the yellow line went below the blue,
Mhm.
you know, it NQ wanted to go by bull bias, but it didn't. It failed and just went back to yellow line being on top. So you know you're gonna short again. It's literally that simple. We wait until market open. We don't trade pre-market uh, because this is our area of where we're working. So here at market open, you could have went for buys, and as soon as it cross, shorts. All you're doing is waiting until you get another cross, you get out and go back in. All you're doing is riding the wave. And if you want something that's a little bit more cleaner, for if you want something just a little bit more cleaner while you're trading, these are just the Haganashi candles where you can see like it's just a little bit cleaner than it is over here on
I've
the
spent
white
a
channel.
lot of time on the Heikenashis. I'm familiar with them. I know that they tend to have that smoother look, and that's why a lot of people like them. But
Yeah,
I've just never figured out, how to get the
that's
movement from them that I would get out of my normal candlesticks.
right. It's just if you want it to look smoother, that's all the Haganashi candles will do. And that's pretty much it, really. Like that's the strategy. Um, if you are if you're getting at the crosses, and that's it. If you've already missed that opportunity, where you weren't able to get in at the actual cross of the EMAs, you'll just wait until it taps the yellow line, and then you can get in for a short there.
A little rejection off of that.
Yep.
Now, so is that really the trigger? Is really that crossover?
Yeah, that's it. The cross at the cross is the best time to get in. If you got in right here, let's say even after this candle closed, and you got in at 26,207, which that would have been like your worst entry.
Mhm.
You would have been in the trade all the way down until here.
Yeah.
26,119. I
All
don't
right.
know about you, but that's a pretty good day.
That is a pretty good day. So William asks a great question. What are your EMAs? I can't remember if you said as we were going through it.
So I have 3 simple moving average, the 3 close and 7 close, and that's it.
3 and 7. That's it.
Yep.
All right. There you go, William. Now, when I look at this chart, of course, you have your crossover back into long territory. Is that exiting your short only, or are you actually taking a long at that point?
Yeah, I would take a long here as well. Like if it's crossing back to the upside, I'm gonna close my short position and get in for a long.
Okay.
But again, I got out of this trade very, very quickly just because this doji formed.
Mhm.
Most of the time, when I see a wick on the top, a wick on the bottom, that means indecision. The market
Right.
doesn't know where it wants to go. But most of the time on that following candle,
Mhm.
it's either gonna we know that direction is going to be very strong after that doji candle. So either
Sure.
going to go up or go down. And for this one, it just went back down to the downside, which we've been short bias all day. So
Sure. Which, yeah, if you've seen the market today, that's a good move.
yeah,
John asks, "Are you on the 1 minute?"
yes, I'm on a 1 minute just because it gives me a lot. It gives me earlier entries, and it gives me a lot more opportunities if I miss my opportunity here at the first cross.
Mhm.
It gives me a lot more opportunity and to actually get back into the trade. If you want you want less opportunity to get into trades, but higher. It is a slightly higher win rate.
Sure.
You can go up to the 3 minute and wait, but you really won't have too many entries. So you would have been in right here. You never would have got out until you still would have been in the same trade because it hasn't crossed yet.
Right.
And you got one opportunity to get in.
My opinion is it's going after that Asia low, so back down into that new week opening gap. So that might be a good move at this point, but again, we don't know. All we can do is follow the instruments that we use to tell us the story that we want to know.
Exactly.
So realistically speaking, so for those first 2 hours, you're pretty much in a trade at all times. So you might be going back and forth, but is that a fair assessment of your typical 2 hours session?
If I'm sitting on my hands, watching the trade and just like keeping an eye out on my drawdown. But other than that, you know the direction of the trade because what the yellow line is on top. Okay, I know if I click any button on here, it's going to be for a short.
Right.